Welcome back. It's the last lap of Business Morning on Channels Television. We're talking about the fixed income segment of the market now, and particularly treasury bills and bonds. We're reviewing the markets in February. Joining me now is Robert Omotunde, who is an investment analyst with AfriInvest. He's joining me via telephone. He's also stuck in the traffic on the expressway owing to the unending queues of fuel, of motorists who are trying to buy fuel, and of course commuters who are stranded at various bus stops. Good morning to you, Robert.
Good morning, Harriet.
It's great to have you join me on the show. So give us a sense of what the bonds, the fixed income segment market was like in February.
Well, the fixed income market, particularly for bonds and treasury bills, have been on an active mode. For February, what we saw was more of investors taking position in the market that is considered to be safer in this kind of investment climate. The volatility that's characterized the equities market, and for most fund managers who are looking to protect their client investment, they've looked into the fixed income market. So, of interest in the month that ended, particularly in February, we saw that activities improved within the shorter to longer end of the curve. There was a new bond that was issued for the bond market. There was a bond issued in January, which is the January 2026 instrument, a 10-year bond. That bond was also listed as part of the benchmark bond. So we saw a lot of renewed activity within that space. And what we saw was more investors driving down most of the yields to the point that most instruments are trading significantly at premium to par currently. From the benchmark instrument, only about an instrument which is the 2030.
Oh, we seem to have lost contact. Network connection, of course, has cut that conversation with Robert for me, but hoping to reconnect with him and continue our focus on the fixed income segment of the market. Of course, just to remind you, the Debt Management Office held its last auction, bond auction for the quarter yesterday, raising 100 billion naira, 20 billion naira of the February 2020 bond, 40 billion naira of the January 2026 bond, which were both reopenings of previous issues, and 40 billion naira of the March 2036, which was a new issue. Was sold via an auction on Wednesday, March 16, I beg your pardon. So for that bond auction, according to analysis from Kodros Capital, it's the 100 billion naira offered as the highest year to date, 10 billion naira higher than that of the February auction, and 20 billion naira more than the January auction. This is the second non-competitive allotment this year, the last being in January, where 10.83 billion naira of the freshly issued January 2026 bond was allotted on a non-competitive basis. Robert already mentioned that as he was giving us his analysis of the markets in February. Also, still taking a look at the numbers from FMDQ OTC markets yesterday, we saw a higher activity in the April 2017 bond with a contraction of 9.43%. That's where the yield finished at yesterday, was valued at 3.30 billion naira, beg your pardon, with a price high of 106 naira 5 kobo. Well, still hoping that we can reconnect with Robert. Okay, so the network has allowed us. Let's finish our conversation now with Robert. So, Robert, quickly, let's get your thoughts on the benchmark bonds and which ones in particular investors will continue to favor. Of course, the Debt Management Office has held its last bond auction for the quarter. What are your expectations?
Well, for the benchmark bonds, like I said earlier, activities have been much more noticeable within these bonds because they are considered to be much more liquid. Of the total 16 instruments, about 8 of them are benchmark bonds. And for the March auction, which is scheduled to hold next week, Wednesday, there is an introduction of a new bond, which is a 20-year bond, March 2036 instrument, similar to what we had in January when a new bond was newly issued. The issuer, which is the federal government in this case, took advantage of the low yield environment relative to what we've always had to issue that bond at a much more lower yield of about 12.5%. So for the next bond auction, which is next week Wednesday, we are thinking that the yield environment will also be as it is currently, and the instrument may be issued at about 12.0%. And it's worthy of note that the DMO plans to issue about 40 billion of that instrument. So we'll continue to see renewed interest, especially by local investors, the PFAs, and the banks. If we recall, most of the auction that has been carried out this year, and of course throughout last year, were usually oversubscribed. For February, the auction that was done on February 2020 instruments and as well as January 2026 were respectively oversubscribed by 200% and 123%. And what we expect for next week is also going to be sort of in that direction, because we see that investors prefer to play within the fixed income market given the various headwinds, macroeconomic headwinds that is affecting equities market. So yes, renewed interest will continue to see within the fixed income space.
Well, thank you so much, Robert, for coming through for us and giving us your perspectives on the market. And also thank you for reminding me that Wednesday, March 16th is still a little ways away. It's not just here. I don't know why I've got my dates mixed up, but the bond auction is for Wednesday next week. The Debt Management Office plans to raise 100 billion naira in the February 2020, the January 2026 and March 2036 bonds.